All right, everyone, welcome back. Ready for another deep dive? Today, we're going to tackle something that can make or break us in the markets, our emotions.
You got it. We're talking trading psychology, specifically how emotions like fear and greed can totally mess with our decisions and what we can actually do about it.
Yeah, I used to think that to be successful in trading, you basically had to turn off your emotions, just be completely rational.
Right, like a robot.
Yeah, exactly. But what if I told you that our emotions can actually be valuable signals?
Yeah.
You give us insights into what the market's doing.
It's true. It's kind of counterintuitive, right? We tend to think of emotions as this like enemy of good trading, but they can actually be super powerful tools if we learn to understand them.
So it's not about ignoring our emotions, it's more about understanding them.
Yeah, exactly. Acknowledging them, not trying to suppress them. Like think about it. When we try to suppress something, it often just comes back even stronger.
Oh, absolutely. Like trying to hold a beach ball underwater.
Hmm.
Right.
Exactly. So instead of fighting our emotions, we need to learn how to decode what they're telling us.
Okay, so how do we do that? How do we start decoding these emotional signals?
Well, let's start with fear, because that's a big one, right? Fear can keep us from taking risks, make us miss out on opportunities.
Oh, yeah, for sure. Fear of missing out, FOMO, that's a
Yeah.
huge one, especially these days with social media and everything.
Totally. And that FOMO can be dangerous. Like when everyone's rushing into a certain asset, driven by FOMO, the price can get inflated. It becomes detached from its real value.
Right, it creates a bubble.
Yeah.
And we've seen how those can burst, haven't we?
Exactly. So that widespread fear, that fear-driven behavior, that can actually be a signal for us, a signal to pause, to really assess the situation, look at it objectively.
So fear can be a warning sign. But how do we know if our fear is based on solid information,
Mm.
like real danger, or if it's just all market noise?
Yeah, that's the key, right? We need to figure out if our fear is rational. And that's where analysis comes in. We got to look at the fundamentals of the asset. Is the price surge justified by actual value or just hype? We got to look at the overall market sentiment. Are there economic or political things going on that are influencing the price?
Right. It's all about context.
Exactly. By digging deeper, we can usually figure out if our fear is something to pay attention to or if it's just, the market being the market.
This is actually reminding me of this one time, I think it was a couple years ago, when I got caught up in this whole tech stock frenzy.
Oh, yeah.
Yeah. Everyone's talking about this one particular stock. The price was just skyrocketing. And I was just consumed by this fear of missing out, right?
Yeah.
It's like, if everyone else is making money on this, why am I just sitting here?
Yeah, I feel that.
So I ended up buying in without
Yeah.
doing my research. I let my fear completely take over.
Oof. How'd that turn out?
Not great. Not great. The stock tanked a week later. Turns out the company's earnings report was terrible.
So you learn the hard way that fear, especially when it's mixed with hype, can be really dangerous.
Exactly. It can make you do some really dumb things.
But on the flip side, fear can also cause us to miss out on genuine opportunities. Like, imagine being too scared to invest in a really promising startup because, I don't know, you think it's too risky. And then it turns out to be the next big thing.
Ugh, that's the worst feeling.
Right. So the key is, like we were saying before, understanding what your fear is telling you, learning to differentiate between fear that's protecting you from a real threat and fear that's just holding you back.
All right, so we've talked about fear. What about the other big emotion in trading, greed? We all know that feeling, right? When a trade is going our way and we just want to keep riding that wave.
Oh, yeah. Greed is a powerful force. It can make us hold on to winning positions way too long, even when it's clear we should probably take profit.
Yeah. Yeah, it's like that gambler who's on a hot streak and they think they can't lose, so they just keep betting more and more.
And we all know how that usually ends, right?
Disaster.
Exactly. So how do we avoid falling into that greed trap? How do we stay grounded when things are going well?
Yeah. Any tips on that?
Well, one really effective strategy is to set clear profit targets before you even enter a trade.
Oh, that's interesting.
Yeah, you decide in advance, what level of profit you're happy with.
Yeah.
What point the risk is just too high, you actually write it down. And then, and this is the key, you stick to your plan. Even when that little voice in your head is like, just a little more, just a little more.
So it all comes down to discipline.
Discipline and self-awareness, yeah. Knowing how your emotions can mess with your decisions, that's huge. But here's where things get really interesting. Once you get a handle on your own emotions, You can start to use them to understand the emotions of the market itself.
Wait, what? Like tap into the collective fear and greed of everyone who's trading.
Exactly. It's like, imagine market sentiment as this big wave, fueled by everyone's emotions. By paying attention to things like, the VIX, which measures volatility, or analyzing like news sentiment, even looking at what people are saying on social media.
Whoa, social media.
Oh, yeah. People's emotions leak out everywhere. So by paying attention to all these signals, you can actually get a sense of the collective fear or greed that's driving the market at any given moment. Like, for example, if everyone is panic selling, that could actually be a great buying opportunity for someone who can stay rational.
So we're not just managing our own emotions, we're actually using them to like read the market's mind almost. That's pretty powerful stuff.
It is. It's recognizing that emotions are what move markets. And once you understand that, you can use that knowledge to your advantage.
So to bring it all back to the listener, what we're saying is by understanding and managing your emotions, you can avoid making those like costly, impulsive decisions. And on top of that, you can develop this amazing skill, the ability to read the market's emotional state and use that to make smarter trading decisions.
That's it. And here's a question for everyone listening. What's the one emotion that you struggle with the most when you're trading?
Yeah, think about it. Is it fear of making the wrong move? Is it greed that makes you hold on too long?
Whatever it is, figure out what it is and how you can use what we talked about today to improve your decision making.
And that's your challenge for this week, folks. Keep digging into this topic. And remember, emotions aren't the enemy. With the right understanding, they can be your biggest asset in the trading world. Until next time, happy trading.